So there will be less competition in the housing market, but will it benefit you? I'm sure by now that you know that the Federal Reserve is raising the federal funds rate by 75 basis points, and they said that they plan on raising it again in July by another 50 to 75 basis points. But if you haven't, let's hear what Jerome Powell had to say.
Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data and the evolving outlook for the economy. Clearly, today's 75 basis point increase is an unusually large one, and I do not expect moves of this size to be common. From the perspective of today, either a 50 basis point or a 75 basis point increase seems most likely at our next meeting.
Real quick, let me introduce myself to those of you who don't know me. I am Sir Ashley. I am a realtor and investor here in the Carolinas, North and South Carolina. And if you're interested in learning about money, real estate, or the Carolinas, please feel free to join the family. And if you gain any value from this video right here, be sure to hit that like button and share it with some colleagues and friends. I greatly appreciate it. Let's get back to the video. Mortgage rates typically follow the bond market, but the federal funds rate does heavily impact mortgage rates. Yesterday in the meeting, Jerome Powell also admitted that the demand for housing is still too high, and the hopes of increasing the interest rate on the federal funds would have the impact of lowering the demand for housing. He also acknowledged the challenges homebuyers, especially young homebuyers, face, mainly due to the lack of inventory and increased pricing.
Mr. Chairman, Mark Hamrick with Bankrate. Wonder what your assessment is about the outlook for the housing market given the years-long increase in home prices and now the sharp rise in mortgage rates. And all that, of course, given the heightened sensitivity around the housing market, given the fact that it was a trigger for the great financial crisis over a decade ago. Thank you.
Sure. So rates were very low. A good place to start is that rates were very, very low for quite a while because of the pandemic and the need to do everything we could to support the economy when unemployment was 14% and the true unemployment rate was well higher than that. So, and that was rates are low, and now they're coming back up to more normal or above levels. So in the meantime, while rates were low and while demand was really high, obviously demand for housing changed from wanting to live in urban areas to some extent to living in single-family homes in the suburbs, famously. And so the demand was just suddenly much higher and low. So we saw prices moving up very, very strongly for the last couple of years. So that changes now, and rates have moved up. We're well aware that mortgage rates have moved up a lot, and you're seeing a changing housing market. We're watching it to see what will happen. How much will it really affect residential investment? Not really sure. How much will it affect housing prices? Not really sure. Obviously we're watching that quite carefully. You would think over time. So there's a tremendous amount of supply in the housing market of unfinished homes. And as those come online, whereas the supply of finished homes, inventory of finished homes that are for sale is incredibly low, historically low. So that it's still a very tight market. So prices may keep going up for a while, even in a world where rates are up. So it's a complicated situation. We watch it very carefully. I would say if you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together, and where inflation is down low again, and mortgage rates are low again. So this will be a process whereby we do our work in a way where the housing market settles in a new place, and housing availability and credit availability are at appropriate levels.
Now, he touched on that we could have an environment where prices are going up, yet interest rates are also going up. We will get to that in a second. Presently, interest rates right now are above 6%, and they have gone down somewhat since the Fed gave their announcement yesterday. But the Federal Reserve's announcement gave little solace to home buyers because rates were in the threes at the beginning of the year. And I recently had a client tell me earlier this week that they are bowing out of the housing market and will sign their lease extension. They are discouraged, and to add insult to injury, that lease extension that they're going to sign is going to up their rent an additional $430 a month. Now, Powell already told us, we saw in the clip earlier, that interest rates will continue to rise going into 2022. And that's good news for some, but it's also devastating news for others. And those others are first-time home buyers and renters who are looking to buy a home. First, let's look at the positive. The rise in interest rates are causing a lot of smaller investors to stop buying. While yes, they can charge more in rent, the increased financing costs due to the increased interest rates are causing those investors to delay purchasing. Also, the crash in the stock market has caused several investors that I know to lose a significant amount of money that they would have otherwise pulled out and used to invest in real estate and put down a large deposit toward their rental purchase. According to Redfin, real estate investor purchases have slowed down in the first quarter of 2022, and that trend will likely continue once we receive the second quarter data. So the positive impact of the increased interest rates is that less investors will be buying homes. That means there should be more inventory on the market for homeowner occupants. Well, let's look at the negatives of raising interest rates. The negative aspect of raising interest rates is that it is now an even steeper decline in home affordability for home buyers. Buyers thought homes were expensive in January when the rates were at 3%. Well, since then, interest rates have doubled and home prices have gone up. From the news conference yesterday and the question and answer section, I think it's pretty clear that Jerome Powell wants to destroy the demand for housing with the hope that once the demand is stopped and destroyed, that will cause prices to level off or even come down or reset. But an often overlooked metric for these higher mortgage rates is that it is impacting renters in the most negative fashion. Because not only are they renting when they really want to buy or own their own home, the higher interest rates are actually driving more people to an already saturated rental market. So if the demand for rentals are going up, what do you think that does for the prices? You are correct. It causes the rental prices to increase as well. So it's really just a slap in the face because renters are paying more for something they don't want, and rental rates are now at historical highs and even going higher. According to Realtor.com, rents across the country have gone up and increased about 15% in the past year. Now, one of the reasons why I really love real estate is that I don't have to know everything to know exactly what's going on. With the stock market, things can take a quick turn almost overnight. With real estate, things move significantly slower. You get to see what's happening around the bend before it actually does, if you've just been paying attention somewhat to your market. So everything in the world could be going wrong, but real estate prices will be one of the last things to react to the change in circumstances because of its transaction time. You see, normally a real estate transaction takes anywhere from 30 to 60 days. So with real estate, nothing happens very abruptly. You get some advance warnings as to what to do and how to game plan. Now, I don't know how many of you are Game of Thrones fans, but winter is here. Interest rates will continue to go up, and so long as inventory remains very low, demand, even if it's cut in half, will still outpace inventory, and that will cause prices to remain constant or even go up slightly. But if you're a potential home buyer, this is what you should be looking for and hoping for in the coming months and, dare I say, year and a half. You should be looking for those home sellers who feel like they missed the opportunity to sell for top dollar. So they come rushing to the market and causes inventory to shoot up to levels of about 3 to 5 months supply. Now, every market is different, so you have to see what the supply of homes is in your market. Here I am in the Charlotte area, and we still have less than a month's supply of homes for sale. I talked to a realtor in the Arizona market just yesterday, and they have a significantly more amount of inventory. So the inventory and homes for sale really depends on where you are in the country. So the first thing you should be hoping for is that sellers rush to the market to sell, to flood the market with more inventory, and that gives you, buyers, more options, and it allows all these sellers to hear the news that the market's crashing, everything's going horribly wrong, and you get to play on their emotions. The second thing I believe you should hope happens is that builders get impatient. Now, what do I mean by that? Well, builders have tons of undeveloped land, and they are presently hesitant to develop that land. And builders are releasing only a small amount of homes every single month in an attempt to keep the inventory artificially low. In fact, news released today that housing starts of new construction homes, are down over 14%. So that means builders are slowing down their building and creating less inventory. But potential buyers and renters should be hoping for the opposite. Buyers want builders to release more inventory. More inventory with less demand could mean an excellent opportunity for you buyers. And who knows, prices may come down a bit. But before prices do come down, builders will start giving away incentives. Incentives such as refrigerators, blinds, which they stop giving away, and they may even throw in washers and dryers. But they will also start to offer to buy down your interest rate so you can get a lower interest rate and be able to qualify for that mortgage for that home. Please be on the lookout for those for all you buyers, potential buyers, and renters right now. But remember, winter is here. Use this time to stay diligent and get your credit in tip-top shape. Because in an economy that's going through a recession, banks only lend money and offer mortgages to the highly qualified individuals. So it does you no good if home prices come down, and let's say interest rates do come down as well, if you can't get qualified for a mortgage. So do your homework and be prepared to take advantage when opportunities arise. Bundle up and be prepared. And remember, all good news is not beneficial, and all bad news is not detrimental. Talk soon.